All right. Good morning, everyone. It is 8:25 in the morning of January 14th, 2022, and this is my pre-market strategy session. So, I titled this video "The Worm Has Begun to Turn" because the rotation into the defensives is going on. That means real estate, utilities, and healthcare. So everything else is getting hammered. Tech, small caps, mid caps, medium caps, and everything in all of the other sectors. Cyclical, non-cyclical, consumer. I think that it's possible that gold will do okay in this environment. Usually, gold actually doesn't outperform during a defensive sector. What makes this different is this defensive sector, this defensive time frame is coming with inflationary pressures. So I think that gold will be okay, but otherwise I would be looking for large cap dividend paying defensives in utilities, real estate, and healthcare. Okay. With that said, the only stock that I'm looking at this morning, there are a few things hitting the scanner. The small cap scanner is really quiet, and it's not like the small caps are doing anything these days anyway. I almost put up, I put up the small caps in the morning just out of kind of like habit. Now, the small cap momentum trade has essentially been killed by Wall Street. So the mid caps and large caps are really kind of where you can find good trades. I mean, you can find good trades in the small cap momentum, but the play is completely different from what I learned, which nowadays it really is a matter of identifying the levels of support instead of momentum. So you can't even really call it small cap momentum anymore. It's like small cap support, which isn't the way that it used to work at all. It used to be, higher prices beget higher prices on that strategy, on the small cap momentum strategy. And it just doesn't work that way anymore. Now it's very much really, you got to really sit back and wait for the support to reveal itself and then attempt to make a trade based on it. So until momentum, small cap momentum comes back, which I don't foresee it doing for a long time, it's all about mid caps and large caps and mega caps for that matter too. So today, I'm just taking a look. I've got NCLH, Norwegian Cruise Line Holdings, up right now on the board. And really, the only reason that I'm looking at it is because it's somewhat of an outlier. It's not healthcare, it's not a utility, and it's not real estate. It's consumer services, as it's listed. Hotels, resorts, and to kind of put a emphasis on here. Let's look at Airbnb, right? So Airbnb took a shellacking yesterday. Wait, no, that's not Airbnb. Where's Airbnb? Airbnb. ABNB. What did I put in? I put in ABNB. Whatever. All right. Let's replace that real quick. Let's get that out of the way. ABNB. For whatever reason, the British stock, I don't know why that shows up first. Whatever. So yesterday, Airbnb took, a 2% dunk along with everybody else, and all the other leisure and everything else leisurely, everything else, took a dive. In the consumer services, hotels, resorts, cruise lines, so on and so on, but not NCLH, interestingly. So I've got it up. This morning it's down 1%. If it opened up right now, it would open up 1% lower than its previous close. So it's taken a hit today. Just figured I'd kind of keep it on watch. And then the rest of everything else, this is from yesterday. BTCS, it opened up, let's see here. Yeah, it hit its peak in the pre-market and then just drained its way down. Found support right here at this level, the support level that was identified. I didn't play it. I wasn't even paying attention to it at this point. It's kind of the way it is with small caps now. I mean, if I had paid attention, maybe I would have gotten a piece of this move. This is, from roughly 750 to a high of 834 and 80 cent move. I mean, I might have been a part of it. I don't know. And then finally, midday here, it made a stab for this other level right here. It was identified pre-market, found heavy resistance there, and then sold off. Let's see, it sold off from we'll call it $8.90 down to, once the selling was over, down to $6.44. So more than, $2.50 move to the downside after it hit that level. I mean, it's just kind of, it's really sucky, So it's kind of why I stopped paying attention to them, It's too bad. This thing had decent headlines too. It's paying out a dividend in Bitcoin. Yeah, all right. First ever company to pay out a dividend in Bitcoin. Then ISPC, this is one, again, pre-market was its best move. It spent the rest of the day just draining down. And I didn't pay any attention to it anyway. This is one, this chart is interesting here. You can see, let's go back. Here's the daily, it's putting its move. I mean, look at it, it's flat. It came up a little bit on some news from the previous day after, Ads Reference Lab in New York for COVID-19 research support. That's, okay, whatever, who cares? TSM, now this one was actually kind of surprising. I didn't pay attention to this one yesterday either, actually, and I'm kind of glad that I didn't. There was the support level that, was the pre-market high here. And then the pre-market and the open, it ramped up. Here, let's see, it opened at 140 and went to a high of almost 145. Not bad, actually, for a gap and go and buying the open. It's just so rare that I buy the open. I will, on occasion, buy the open, but it's usually on a stock that I'm very familiar with. In this instance, I just, stopped paying attention to it. It did actually give a little trade here off of support down here at 139 even, and made another run for 142, this level right here. It was marked yesterday and then just drained away for the rest of the day. And here it is the next day and it's coming back down again. I imagine this thing's going to close its gap. And here you can see, technically speaking, the top of the gap is, 132.85 right here. I wouldn't be surprised, though, to see this thing find support in a little bit higher over here in this candle right here. This is where the selling was last left off. So to see a bull bear fight right in here in this area, this, I'd say between 133.77 and where it is right now, pre-market 135.61. If it found support in there, I wouldn't be surprised. But that's not a high confidence trade. That's not a trade that I'm willing to take. And yesterday, actually, I was actually pretty bullish. Actually, yesterday TSM was the stock that I was going to pay attention to most. That was the original plan. But I actually didn't pay attention to it at all. I wound up looking at Tesla and Amazon. And so I shorted Amazon yesterday. What is it called? Hedgeye is bearish Amazon. And even though it's close to the bottom end of its risk range right here, it started out in midday, kind of in the mid-range. And then once it became obvious yesterday that it was going to be a day of risk off, people were starting to sell. People are going to cash. So the economic environment that we are entering into is going to be a slowdown, but it's not severe. It's not, GDP is still growing, although it's decelerating. The forecast on inflation is that it is still growing, but the growth rate is decelerating. So it's not like the crash is happening. That could happen later this year. It really kind of depends on how much the Fed decides to tighten and do quantitative tightening and balance sheet runoff and da-da-da-da-da-da. It depends. It really a lot depends on the Fed, of course. So the possibility exists for a severe turndown or downturn toward the middle, roughly the middle of the year. But we'll see. Right now, though, there is definitely the title of the video is "The Worm Has Begun to Turn." And if you're familiar with a worm gear, worm gears are typically associated with very slow mechanical processes. So once the worm gear starts to turn, it turns a gear, and the gear moves really slowly. I imagine that we are somewhat at the beginning of a downturn, sustained downturn. Now, and that means get defensive. And ironically, get defensive, what that usually means is actually get into the areas that don't get hurt as badly. So it's not really that, going into real estate, utilities, and healthcare you're going to see a lot of gains there. You're just not going to see as much loss, like as if you were in tech or consumer cyclicals or, what else? Name the other sector. Beverages. So on and so on and so on. It's just that you're not going to get hurt as bad. So if you're rotating your portfolio, suppose you have $1 million, and you rotate your portfolio into the defensives. Once the shitstorm hits, you will still see a hit on your portfolio, down 5-10%, but it won't be the possibly 20, 30, 35% that the tech sector or the small cap biotech, which would be 90% down. That's a horrible sector to be in during a downturn. So on and so on and so on. You're still going to take a hit, but it won't be as bad. Okay, so here we are. Tesla and Amazon put in really very predictable moves yesterday on the downside. And so I didn't pay attention to BTCS, ISPC, or TSM yesterday. It was Tesla and Amazon. This morning, Las Vegas Sands and Wynn are up this morning because of an announcement out of Macau, apparently. I'm not at all interested. This is actually, emerging markets might not be a bad place to be, but this is looking technical to me. Look at this daily chart right here. This thing has really come down, and now here it is pre-market at 41.32. This is simply nothing more than technical bounce. I don't see a trade happening in this today, or at least the trade setup right now is just not obvious to me anyway. In fact, if there were a trade on this, I would be looking for it to hit the top of this gap right here, and I'd be looking to short it. I don't like to short as much as I like to go long, so there's nothing. This isn't attractive to me. NCLH, you can see here too. Actually, NCLH. I mean, it's kind of doing a stair stepping down here, and I found it very interesting that yesterday. So I wonder, what the difference is with NCLH as opposed to everything else that's in sort of the leisure industry. Yesterday, when everything else was selling off, NCLH was catching a bid. So I wonder. I just have it on watch. I'm going to keep my eyes open, my ears open for a little bit of news on NCLH to see what's going on with it. All right, everybody. That's, I guess we could take a look at the large caps. I mean, it's time to get defensive. Here the possibility. Let's see here. Here's this really kind of short-term support and resistance line right here, and it's going to open up really close to the bottom of it, really close to it right there. So. Things are looking corrective here. So, and until that changes, I don't know. The Hedgeye daily sort of macro show doesn't start for another 20 minutes. And so, I'll just get a heads up on what he's saying right there. They still have the SPY or the S&P is being bullish, and until the data comes in otherwise, this might be an opportunity to buy the dip. Still, even still, it might be an opportunity to buy the dip. Let me look at the risk ring. So they have the risk ranges up for this morning already, and they are still bullish. The S&P. In fact, actually, let me pull up. I'm going to put the levels up on the SPX here. I'll change those real quick so you can get an idea of what they are. Let's see, 6311. Is that right? Oh no, 46. 4611 as the low end of the range. But warning, this is a warning that even the leader over there at Hedgeye puts out, is that once these start to be wrong, once he starts losing money on these risk ranges, then that means trend is broken, and it's really quite possible the other side of this thing is starting to roll out. So, take this. Previously these support and resistance lines, these areas that he would point out were excellent buying opportunities. But now Keith McCulloch, he does warn that this bottom of the range, it could give up the bottom of the range here. So as of right now, the data is still coming in bullish for the S&P, but that data could change, and the market could move in front of the data. So take it with a grain of salt, essentially. Let's see. Then let's go to the my favorite indicator, which is the VIX. So VIX is the VIX is no longer looking like it's volatility spikes. These volatility spikes that are happening back here, they are no longer episodic and non-trending. It looks to me as though the VIX has started to find a bottom here. In fact, let me get rid of all these drawings. So, and I'll get rid of, let's see. No, well, I'll just make them disappear for right now. And then I'll make that one all right, make that one. I'll just make it all go away so we can just kind of take a look at just the chart here. And if you look here, this is a series of, here's the low, the most recent low. Here's the next most recent low, and here's the next most recent low. And actually, if this low holds right down here at 1745, so it looks like it's starting to bottom out. That's not good for higher prices on the S&P if that bottom holds. I think things will settle down. We'll see another spike here, and then things will settle down again. But as long as it keeps holding these higher lows, then the risk there's too much risk, not enough reward. All right, and then we'll take a look at Bitcoin now. This is going to be interesting. So let's see. I guess there was the 2018. Let's go back here and look at 2018 here. Remember the downturn in late 2018? Yeah. So there was a market, I guess it was the taper tantrum, or I can't remember exactly what it was. But late 2018, there was definitely a downturn in the market. It was risk off. And Bitcoin took a shellacking here. Let's look at the price change. Let's look at the percentage level price change here. Yeah, it took a 50% haircut from, let's see, what's that? 6,298, we'll call it 6,300, down to 3,200. So almost a 50% haircut on Bitcoin. So if I were to guess, and and this is all just an educated guess, that is, my guess would be that Bitcoin is risk off, means, risk off for Bitcoin. So let's see how far we've gone here from this level down from 69, looks like 69,000 down here to 29. The low down here, sorry, that's not right. The low down here is, that low right there is 39,558. That's a 42% haircut. So Bitcoin could take a much deeper haircut here. We'll see. We'll see what this next support level does. If suddenly buyers come in at this level right here, 4611, and starts running the S&P back to new highs, then Bitcoin will most likely be out of danger too. There's a rotation happening though, and there is, a slowdown is occurring. Now, don't mistake that slowdown as being really all that negative. I mean, GDP is still forecast to grow, although somewhat low. It's still forecast, or somewhat lower than recent history. It is still growing. GDP is still growing. It's just not growing as fast. So, slowdown. Don't mistake slowdown for recession. Now, it is possible that we could start slipping into recession by mid-year or so. That's negative GDP growth. I doubt that though. I mean, not just negative GDP growth, but that means like negative GDP, not just like a slowdown. So essentially, negative, what is happening now is a negative in comparison to previous quarters, but there's still growth. A recession would mean negative GDP, not just the rate of change, but also actual negative GDP. Okay, everybody. That's my pre-market strategy session. Yeah, I am probably just going to play Tesla and Amazon for the downside today. All right. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at the recap. I am out.